The air is electric, charged with anticipation. You can feel the energy building. Everyone's talking about one number, $100,000 for a single Bitcoin. The magic number that has captured the imagination of investors worldwide. As of June 24, 2025, Bitcoin has flirted with record highs, inching ever closer to that monumental milestone, pulling the entire crypto market along for the ride. A rising tide lifts all boats, as they say. This isn't just about price, it's a psychological milestone that could change the game for investors everywhere. This is a global phenomenon, transcending borders and traditional finance. But with excitement comes risk. The crypto market is famously volatile. What rockets up can crash down just as fast. It's a wild ride, so buckle up. This video is your map for navigating this moment. We'll break down why $100K is on everyone's lips, what could happen next, and how to prepare. Knowledge is power, especially in the world of crypto. Think of this journey as climbing a mountain. The view from the top is breathtaking, but the path is steep and risky. Many will rush in, unprepared, chasing stories of overnight riches. Our goal? Give you the tools and knowledge to make smart, confident decisions. Decisions rooted in understanding, not hype. We'll explore Bitcoin's history, the forces driving its price, and what the market might look like when $100K hits. What will the landscape be? Who will be the winners and losers? This isn't financial advice, it's financial education. The bull market is loud, but the smart investor listens for whispers of caution. Let's dive in, and remember, invest wisely and stay informed. To truly grasp where Bitcoin's headed in this ever-evolving landscape, let's rewind the clock and revisit its origins. Back in 2009, a pivotal year for the digital world, the enigmatic Satoshi Nakamoto launched Bitcoin, introducing a revolutionary concept to the world. Initially, it was worth almost nothing, a mere fraction of a cent, primarily mined by hobbyists and tech enthusiasts who saw the potential in this decentralized currency. One legendary story perfectly encapsulates its early value. The tale of 10,000 BTC used to purchase 2 pizzas. Those coins are now worth hundreds of millions of dollars, a testament to Bitcoin's incredible growth. The first big surge in price came in 2013, marking a significant milestone in Bitcoin's journey. It broke the $1,000 barrier, capturing the attention of mainstream media, before crashing hard, reminding everyone of the inherent risks. But Bitcoin, proving its resilience, survived, repeating a cycle of boom and bust, characterized by huge run-ups, brutal corrections that tested investors' resolve, and slow, grinding recoveries that rewarded patience. The year 2017 saw Bitcoin reach an astonishing $20,000, only to then tumble dramatically to $3,000. The real shift, the game changer, came when institutional investors finally arrived on the scene, recognizing Bitcoin's potential as a legitimate asset. Companies like MicroStrategy, leading the charge, and Tesla, with Elon Musk's endorsement, and financial giants like BlackRock, the world's largest asset manager, started buying in, signaling a new era for Bitcoin. The introduction of Bitcoin ETFs made it easier for everyone, from seasoned investors to everyday individuals, to invest, signaling Bitcoin's definitive arrival as a serious and legitimate asset class. With each cycle, the lows get higher, establishing a stronger foundation, and the highs soar even more, demonstrating exponential growth. Bitcoin's story is one of remarkable resilience, characterized by extreme volatility and a growing belief in its long-term potential. From its humble beginnings as a niche experiment to its current status as a global financial force, it's now aiming for its boldest milestone yet, reaching $100,000. The stage is set, the anticipation is building, for Bitcoin to potentially reach $100K. Let's delve deeper and see why this target is within reach. Why do so many believe $100K is next? It's not just hype. First, institutional money is flooding in. BlackRock's Bitcoin ETF opened the door for trillions to enter the market. ETFs make Bitcoin accessible for everyone. No tech headaches, just easy exposure. Second, inflation is eroding traditional savings. Bitcoin's fixed supply makes it digital gold, a hedge against devalued currencies. Third, adoption is exploding. The Lightning Network makes transactions faster, and countries like El Salvador are betting big. As more people and businesses use Bitcoin, demand grows. Finally, market psychology matters. The $100K narrative attracts attention, which brings in more buyers, fueling the cycle. It's a perfect storm. Institutional adoption, inflation fears, tech upgrades, and powerful narratives. That's the rocket fuel for Bitcoin's march to $100K. One of Bitcoin's most powerful price drivers, and a key element of its design, is the halving. Every 4 years approximately, the reward for mining new Bitcoin blocks is cut directly in half, effectively slowing the new supply rate. Simple economics. Less supply entering the market with steady or rising demand, prices tend to go up. Historically, past halvings have triggered massive rallies, from $12 all the way to $1,000, then from $650 to nearly $20,000, and most recently, $9,000 to around $68,000. The upcoming 2024 halving is quite unique. It's happening as institutional demand absolutely explodes, largely thanks to the new ETFs. So this time, we have a potential supply shock meeting a significant demand shock. That's precisely why many analysts are so bullish. The underlying fundamentals are stronger now than ever before. The halving event isn't just a simple technical event, it's essentially a built-in countdown leading to the next big rally. And if history tends to repeat itself, then $100K could just be the very beginning. But the big question is, what happens after we actually get there? Picture it. Bitcoin crosses $100K, news explodes, FOMO sweeps in. Everyday investors rush to buy, pushing prices even higher. As Bitcoin gets expensive, new buyers chase altcoins and meme coins, hoping for the next big thing. Money pours into the market, often recklessly, creating a speculative frenzy. Meanwhile, the whales, big investors, see this as their chance to sell for huge profits. They offload their holdings to eager newcomers, putting downward pressure on prices. The market becomes fragile, hype-driven buyers prop it up while experienced players quietly exit. We've seen this before. After every major milestone, a wave of euphoria is followed by sharp corrections. The period after $100K will be thrilling but also dangerous. Fortunes will be made and lost by those unprepared for the risks. So what can we learn from the past? The 2021 bull run holds crucial lessons. After Bitcoin's all-time high, hype soared. People took out loans, quit jobs, and believed prices would never fall. The biggest mistake? Holding on too long, driven by greed and wild predictions. Whales sold gradually, cashing out as retail investors piled in. When the crash came, many were left holding assets that lost 80 to 90% of their value. Another trap chasing meme coins and low-quality projects, hoping for overnight riches. Most of these tokens collapsed and never recovered. Bull markets make everyone feel like a genius, but bear markets reveal who's truly smart. The winners had a plan, took profits, and didn't let emotions rule. The losers followed the crowd and ignored warning signs. As $100K approaches, remember history doesn't repeat but it rhymes. Play smart, like the whales. So, how do you prepare for the possibility of such a significant milestone? It's not just about hoping for the best, it's about strategic planning and proactive measures. The answer: have a well-defined exit plan in place. This is absolutely crucial for securing your profits and minimizing potential losses. Before the hype hits and clouds your judgment, the market can become irrational, so you need to be prepared. Decide in advance with a clear head and a rational approach. At what prices you'll take profits. Don't leave it to chance or emotion in the moment. Write it down. Make it a concrete plan that you can refer back to. For example, sell 10% at $90K, another 10% at $100K, and more at $120K. This staggered approach can help you maximize gains while mitigating risk. Discipline beats emotion. It's easy to get caught up in the excitement, but sticking to your plan is key. Taking profits isn't weakness, it's wisdom. It's a sign of a smart and strategic investor. At least recover your initial investment, so you're playing with house money. This reduces your stress and allows for more strategic decisions. Watch Bitcoin dominance, BTCD. When it drops sharply, money flows into riskier altcoins, a sign the market may be overheating. This is a classic indicator to watch out for. Use this as a signal to get cautious and stick to your plan. Don't deviate just because of market noise. Ignore the hype. Social media will be full of wild predictions and flashy lifestyles. Don't let FOMO trick you into buying at the top or holding too long. You can't time the peak perfectly, but you can protect your gains. The goal: capture profits and safeguard your capital. Strategy beats luck every time, so plan wisely and trade smart. As Bitcoin nears $100K, hope and excitement are everywhere. But hope isn't a strategy. The crypto market is thrilling and ruthless. To win, you need more than belief. You need a disciplined plan. Your strategy is your compass, built on education, defined by your goals, and executed with discipline. Set profit targets, diversify, and know when to tune out the noise. A good strategy protects you from greed and fear. The future of crypto is bright, but the path will be bumpy. The winners treat this like chess, not a lottery. Learn, plan, and stay disciplined. In crypto, a smart strategy is your best friend.